MicroStrategy? Are you kidding me? They said it was the better Bitcoin. They said.
Is MicroStrategy a Ponzi scheme? Like I came across these clips that just had me questioning this thing, you know?
His book, all right? The guy sells stock and pref shares and debt and then buys Bitcoin with it. The stock trades at twice the value of the inherent Bitcoin. That smells like something that ain't going to work long term.
This really sounds dodgy. I really started to question this whole strategy thing. And fortunately, there's also an interview where he answers or tries to answer some of these questions. So let's hear a little bit more from
Just
Mr.
saying.
Wonderful.
I like the guy, but it has nothing to do with strategic reserve of Bitcoin, which will never happen because we'll never get buy off on a bipartisan basis. Michael Saylor.
I don't know. This guy wasn't a crypto guy when it first came out, so it wasn't good. It'll never happen. Now is I don't know. I don't trust that guy. Let's just say that. Okay, let's go on.
That was the implied volatility on top of Bitcoin. How am I down 48% in the last 3 months? What's Bitcoin's price right now? Bitcoin's down 6% this year. How does that even work?
And yeah, the dude's speaking facts actually. I went and checked out the share. Yeah, you can see here. Last year, right? 473. Now 199, like 50%. And you look at the price of Bitcoin. This is November last year. We're more or less where we are. And yeah, this is down 50%. So that's brutal. That really is brutal.
What happened to pumping the actual stock? He's selling it to buy Bitcoin. What happened? The NAV is below 1. Michael Saylor, you're a scammer. You're a scammer. I can't believe I bought it. I bought the top of the shit. I hate Bitcoin. I hate Michael Saylor. I hate every digital asset treasury company that's ever existed. You're all piece.
I think we'll just leave it there. Like he's just lost it. He's not talking any more sense. But yeah, so the guy is hectically down. Bought the top. Yeah, more than 50% down, while Bitcoin is flat for the year. But what's interesting is actually our bot is not flat for the year. So we've done some nice returns in the last 6 months, as you can see here. But we will come back to that. Let's listen to Michael Saylor respond to some of these stuff.
You know, I think we all want to go to the moon, but if you want to ride the rocket, you got to be prepared to pull the G's. Over 5 years, Bitcoin's had like 6 brutal drawdowns. If you roll the clock back 13 months, we were sitting around 68,000. And then after the Trump election, we had this incredible rally from 68 to 106,000 in 5 weeks. If you go back 14 months, we were about 55,000. And so if you'd said we're going to go from 55,000 to 94,000 in 14 months, that would have exceeded any reasonable investor's expectations. Over 5 years, Bitcoin's up about 50% a year on average for the 5 years. Gold and S&P are studying the cost of capital at 14%. My company's strategy is up 71%, equivalent to NVIDIA. There's no other stock in the S&P that's done any better. So I think the volatility comes with the territory.
I don't know those claims. So I'm questioning that. How is he coming up with that percentage return? This is definitely down, unless he's talking from 2024, which is sus. Anyway, let's listen on here and see what else.
Territory. If you're going to be a Bitcoin investor, you need a 4-year time horizon, and you need to be prepared to handle the volatility in this market.
So when you look at the price,
I fully agree with
right now,
him
and then we'll talk about the implications for strategy. But when you look at the price right now, what is the upside?
This is our historical data here of Bitcoin, which shows the time to profitability. So I fully agree with him that if you're a Bitcoin investor and you work on a 4-year time horizon, you're guaranteed to be in profit. So Let's say +1 there for him.
This moment look like to you, and what does the downside in this moment look like to you?
You know, I feel like we put in a pretty strong base of support around here. There's an incredible amount of leverage coming out of the system, a lot of liquidation. A lot of the OG holders were selling at the $100,000 level, and so I'm fairly comfortable at this level. I would think that we'll build from this base and we'll rally from here. Obviously, it's hard to make a forecast.
Look, he's a perma bull, always pumping the bags. I don't know if he says we'll build a base and pump from here. Looking back, if we break down below 85, I don't know. Proper bear market. Bottom, who knows? But with that said, I do feel like maybe there is a bit more manipulation, maybe trying to trigger some more liquidation. So we might just wick down below 85 and then come back. We'll see. But anything below this line right now is cheap considering the US stance on crypto and all the institutional adoption, I would say. Yeah, let's continue.
For the end of the year right now, given what's happened over the past few weeks, and especially the shift in the macro environment. But, you know, as you know, my view is Bitcoin's going to outperform gold. It's going to outperform the S&P. It is digital capital. And so if you're a long-term investor, this is the place to be.
In terms of the way your fund is structured and the debt that you've taken out to effectively buy Bitcoin, what are the trigger points, just so people understand the full risks involved for you? In terms of some of these preferreds and other things, in terms of where Bitcoin needs to lie, either on the low end?
Well, I mean, it's pretty important to note that we're not even 1.15 times levered. We're very fractionally levered, and our debt that we have is 4.5 years out. So we don't really have any trigger points anytime soon. And if Bitcoin were to fall 80%, we're still over collateralized and we're fine. So our balance sheet's pretty stable. The company's strategy, just like an intelligent bank, would be to build amplification for the common stock using preferred equity. So the equity never comes due. It's a dividend payment declared by the board. It's not a coupon. We can't be in a default. There is no credit default situation from the digital credit that we're selling at this point.
I was curious if you could comment on something we heard from Kathy Wood last week. You know, she has a target, I think by 2030, she had it at $1.5 million a coin, and recently suggested it might actually be closer to a 1.2, which is still pretty remarkable unto itself. And yet, when she explained her new rationale, it was actually that stable coins, the sort of emergence of stable coins and the growth of those coins being used for transactions, she argued could ultimately crowd out some of the use case for Bitcoin. What did you think when she said that?
I think the entire digital assets economy is exploding and growing in a bunch of different dimensions. Right now, the way to think of it is that half of the economy is built around Bitcoin. It's digital capital. Bitcoin is digital gold. And the killer application on top of digital capital is digital credit. Instruments like Stretch, STRC, credit instruments that pay yield. And that's a very simple business. The other half of the economy is digital finance, and it's going to be built on the proof-of-stake networks that are emerging, the Ethereum Solanas, the BNBs. And the killer application for that part of the digital assets economy is tokenized currencies, a la stablecoins, tokenized securities, tokenized real-world assets, tokenized brands, and DeFi in general. Well, that's a very complicated technical development, and I'm sure that stablecoins are going to go from hundreds of billions to trillions of dollars, but it's not really competing with digital capital. No rich person wants to buy the currency instead of an equity or a real estate or a capital asset.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
No, we're always buying. Bitcoin's always a good investment.
But no, that's interesting, though, in terms of buying today at $95,364 versus buying 2 or 3 weeks ago. You're saying you're buying it at both. If you were looking over the last year, sort of at your average, do you weight the buying based on trading?
We now own nearly 3.1% of the network, and we bought it on a blended average about $74,000 a coin. The point that I would make for any investor is If you have money you don't need for 4 years or longer, and if you don't trust anybody, you want no counterparties, you just want to own a piece of the global digital economy, you buy Bitcoin. It's the commodity. If you're an equity investor and you want to bet on digital credit and you want to bet on digital capital and you want some amplification, you buy an equity like MSTR. Right. If you have money for less than 4 years and you're an investor and your time frame is 12 weeks, you should buy the digital credit. For example, the credit instruments we've created have stripped the volatility off of Bitcoin. Bitcoin's vol is like 45 on a trailing 30-day average. We have instruments at 28, 21, 15, and stretches a vol of 8. So if what you want is like a serious yield, you want the credit, you don't want the equity or the commodity.
Mike, I want to thank you for joining us. Michael Saylor is here.
Okay, so there you have it. There's Michael Saylor's answer to these two people who are losing their minds on strategy. I think he said he's got an average buy of about 74, and he's been through a bear market before. So I personally think I wouldn't worry so much about strategy being in trouble unless Bitcoin went to 20K, which I can't see happening anytime soon. But I think that this should shake out any weak fake Bitcoin treasury companies, and let's see what comes out of the woodwork in a month or so. This is how it generally happens, and the FTXs come out, or the other hedge funds, whatever they were, and yeah. So I think the fair thing that he said again was this time horizon on it's best to just buy Bitcoin directly and hold, but that's where we disagree, because using our bot at CoinHage, we are now able to outperform holding. As you can see, these are the returns over the last 7 days, we only down 2%, while Bitcoin's down almost 8%. Because we had sold and re-entered again. Let's pull up daily. I think I'll see it easier. I think the bot bought now recently somewhere here at 95 something, and we had sold somewhere around here at 103, having bought somewhere here at 101. So that's how we do it, as we try and avoid some of these deep drawdowns and steadily stack sets as the price goes nowhere. As you can see, over 6 months, we've actually turned a profit, while Bitcoin itself is down 17% in the last 6 months. If we go to the monthly again, and you look at the last 6 months, 1, 2, 3, 4, 5, 6. So you're somewhere here, and yeah, you're down. So if you had bought here at 110, yeah, you're down. But had you activated the bot at the same time on CoinHage, you'd actually be up 1% and having an even better entry, as we try to avoid some of the drawdowns over the last couple of months. So check out CoinHage Pro and sign up for our bot. Last thing is, like I said, I think Saylor's doing some experimental stuff, but he's been through a bear market. He's got intentions of getting on the S&P 500. I think what he's running a solid ship. Whether this will survive a 20K Bitcoin or not, I don't know. But anyway, 50K, 70K, I think it should be fine. Let's see. Time will tell.